We are told to be prepared, to save, to invest wisely, yet the very market we ask to participate in is inherently unpredictable. So, where does this leave us in the face of the housing crisis? It leaves us with a paradox. My advice is threefold, and it's all based on Housel's philosophy. First, the truth is the next huge impact on the world will be something nobody is talking about right now. This is the true paradox of finance and perhaps the most valuable lesson of all. Welcome back to the Paradox Experience podcast, where we challenge conventional wisdom and explore the hidden truths of finance, life, and everything in between. Today, we're diving deep into a topic that touches everyone, from first-time home buyers to seasoned investors: the unpredictable nature of life and its profound impact on our financial security, specifically in the context of the current housing market. We're going to explore a fascinating paradox. The more you chase predictability, the more vulnerable you become to the truly unpredictable events that shape our world. The world we live in is often described as a series of predictable events, a straight line from cause to effect. We plan for retirement, save for a down payment, and invest in what we believe are solid markets. We follow the news. We read expert forecasts and try to make logical decisions based on the information we have. But as we've seen time and time again, that straight line is an illusion. Life is full of unforeseen twists and turns, moments that serve us as stark reminders that risk is something you can't always see coming. Think about some of the monumental shifts we've experienced in just the last few decades. The fall of Lehman Brothers, for example, in the years leading up to 2008, the housing market was seen as a pillar of American prosperity. Home ownership was a core part of the American dream, and for many, it seemed like a bulletproof investment. Then, in a blink of an eye, the collapse of a single investment bank sent shockwaves through the global economy, directly contributing to the 2008 housing crisis. Millions of people lost their homes, their jobs, and their life savings. It was a failure of imagination, not just of finance. The experts were looking at the data, but they weren't accounting for the interconnected, fragile nature of the system itself. Or think back to 9/11, an event that reshaped geopolitics, introduced a new era of global uncertainty, and had a direct impact on sectors from travel to real estate. No one could have possibly forecasted the magnitude of that event or its long-term financial consequences. Airlines were grounded, consumer spending plummeted, and the ripple effects were felt for years. The financial models simply didn't have a variable for something so catastrophic. And more recently, the COVID-19 pandemic, which hit the whole world. Who could have predicted that a virus would completely upend our way of life? It changed how and where we work, where we shop, and how we live. The financial implications were immediate and global, forcing us to reevaluate everything from our emergency funds to the very concept of a stable job. These aren't just isolated events, they are part of a larger pattern. The fall of the Berlin Wall, the invention of the internet, the rise of the smartphone, each of these moments were monumental, but they were also almost impossible to predict. What's on the horizon? The rapid development of AI is poised to change everything, and while many talk about its potential and its risks, no one can truly predict its full impact. The truth is, the next huge impact on the world will be something nobody is talking about right now. It will be an accident of history, a surprise that catches everyone off guard. This brings us to a fascinating paradox that is at the heart of our discussion today. We are told to be prepared, to save, to invest wisely, yet the very market we ask to participate in is inherently unpredictable. Investors might know the game, they might understand the rules and the players, but they cannot actually predict the market's behavior with any certainty. It's a game of probabilities, not certainties. This is where a lot of people get stuck, right? They try to find a system to beat the market, to time their investments perfectly, and they end up getting burned because that system doesn't exist. The more you chase predictability, the more you risk being caught off guard by the unpredictable. We convince ourselves we can see the future, but in reality, we're just drawing a straight line from what we know to what we hope will happen. The real world, however, operates in curves and sudden detours. This is where the wisdom of someone like Morgan Housel becomes so valuable. Housel, the author of The Psychology of Money and Same as Ever, has made a career out of exploring the human side of finance. I recently watched an interview with him, and his insights resonated deeply with the core themes of this podcast, and this is one of the reasons why I wanted to talk about him and based this whole episode on one single man and his advice. Now, please note that I'm not giving you any financial advice right now. It's just a review based on what I've heard, what I've studied, and what I've learned. It's about giving you a new mindset for thinking about money. He brings up an important debate. Some business entrepreneurs say, don't save money because its value depreciates. And while that's true, they argue that you should always be putting your money to work, taking calculated risks to generate more wealth. But Housel, in a powerful counterpoint, says you should save money precisely because times are always unpredictable. He reminds us that you don't know what's going to happen. Having a buffer, a safety net, is not about stagnation, it's about resilience. He emphasizes the importance of endurance in investing, a point he illustrates with the incredible story of Ronald Read. Ronald Read wasn't a Wall Street investor or a tech mogul. He was a janitor and a gas station attendant in rural Vermont. For decades, he worked quietly, living a simple life. He saved what he could and invested it in blue chip stocks. He never timed the market, never made a splashy trade. He just bought and held. By the time he passed away in 2014, he had amassed an $8 million fortune. His secret wasn't a secret at all. He understood that the real power of investing wasn't in outsmarting the market, but in letting time and compounding do the heavy lifting. He had a financial life that was built to last, to endure the unpredictable dips and crashes of the market. His story is a testament to the idea that financial success is less about outsmarting everyone else and more about outlasting them. And it's the same thing in business. His strategy was to have a financial life that was built to survive. Housel's work is a masterclass in behavioral finance. He talks about the hardest financial skill, getting the goalpost to stop moving. He argues that as our income rises, our expectations tend to rise with it, leading to a constant state of wanting more. This is just human nature, right? We get a raise, and suddenly the bigger apartment or the more expensive car that was once a luxury becomes a necessity. We constantly move the goalpost for what it means to be financially secure. This is a crucial lesson for anyone navigating the housing market. I've seen it myself, and I've talked to countless people about it. A friend of mine got a big promotion and immediately started looking at houses 20% more expensive than he had planned. He told me, I can afford it now, so why not? He was so focused on the next rung of the ladder that he forgot to check if the ladder itself was stable. He stretched his budget, took on more risk, and became financially fragile in the pursuit of a bigger, better house. He moved his own goalposts, creating new pressures that didn't exist before in a world where we're told to buy bigger, better, and more expensive homes. Housel's message is a powerful call for contentment and a focus on what truly matters. Instead of constantly chasing the next best thing, he suggests defining what enough means to you and sticking to it. This doesn't mean giving up on your goals. It means setting a goal that is truly yours and not one dictated by pressures of society or the latest trends. And I know that, a lot of people are just going to say that I bought a house many years ago and it was a great investment, and I'm so happy that I did, because if I wouldn't, something would have happened. But mitigating risks is very important. Risk is something you can measure, quantify, and model. It's the probability of a specific outcome happening. Predictability, on the other hand, is the realm of the unknown unknowns, the things you don't even know to be afraid of. Most of finance focuses on managing risk, but the biggest dangers often come from the unpredictable. The housing crisis was not just a risk, it was a cascade of unpredictable events and human behaviors that broke the system. You can model interest rates, but you can't model the collective fear that drives a run on a bank. This brings us to his biggest regret: the amount of time he has wasted worrying about things that never happened. This is a sentiment we can all relate to, especially when we consider the anxiety surrounding financial decisions like buying a home. We worry about market crashes, interest rate hikes, and the future of our investments. But Housel's experience is a reminder that while some worry can keep us safe, too much can rob us of our happiness. It's the difference between being prepared for a storm and letting the fear of a storm prevent you from ever enjoying a sunny day. So, where does this leave us in the face of the housing crisis? It leaves us with a paradox. We need to be strategic, but we also need to be flexible. We need to be informed, but we must also acknowledge that no one has a crystal ball. We've seen that the housing market, like the stock market, is subject to unpredictable shocks. A pandemic, a war, or a new technological disruption can change the landscape in an instant. The lesson from Housel and from history is not to try and predict the next big thing, but to build a financial life that can withstand it. This is where we can shift our focus from being market timers to being market endurers. To help us connect these philosophies to the real world, I've brought in a hypothetical guest, Dr. Evelyn Reed, an economist specializing in behavioral finance. Evelyn, thanks for joining us. And Evelyn, just for anyone who know, is a man, not a woman. Dr. Reed, thanks for joining us. Thanks for having me. I think this is such an important conversation, especially now. Dr. Reed, from your perspective, what is the biggest mistake people are making when they approach the housing market today? The biggest mistake I see, and it ties directly into what you've been discussing, is a failure to differentiate between short-term noise and long-term signal. We are bombarded with headlines: interest rates spike, housing bubble imminent, prices set to fall. This creates a sense of urgency and fear. People make emotional decisions based on what they think is going to happen in the next 12 to 18 months. They try to time the market, holding off on buying because they are convinced prices will drop, or rushing in because they fear being priced out forever. This is the illusion of predictability at its most dangerous. That's a powerful point. So, what does a resilient long-term approach actually look like? It means having a diversified portfolio, not just in stocks and bonds, but in your entire financial life. It means having a strong savings buffer, an emergency fund that can get you through a few months of job loss or an unexpected home repair. According to the latest data from the Federal Reserve, almost 40% of Americans couldn't cover an unexpected $400 bill expense. That's a recipe for disaster in a volatile housing market. This isn't just about money, it's about peace of mind. It's the difference between being forced to sell your home in a down market and being able to ride out the storm. So it's about building a financial life that can absorb a shock rather than one that will shatter on impact. What about the practical advice for people listening right now who are maybe in the middle of this process? My advice is threefold, and it's all based on Housel's philosophy. First, buy a house you can actually afford, not just one you can be approved for. Banks will often pre-approve you for a mortgage that pushes you to the very limit of your income. That leaves no buffer for the unpredictable events we've discussed: a job loss, a medical emergency, or even a child's expensive education. The goalposts should be based on your comfort, not on the bank's maximum offer. Second, think in decades, not in years. When you're looking to buy a house, are you buying for a long-term family home, or are you hoping to flip it for a quick profit? Housel's wisdom would suggest that the former is a far more resilient strategy. The long-term perspective naturally accounts for the inevitable ups and downs of the market. You are not trying to win the game in a single move. You are building a life that can withstand the game's unpredictability over decades. And finally, the third one, focus on what you can control. You can't control interest rates or the direction of the housing market, but you can control your savings rate, your spending habits, and the amount of debt you take on. Focus your energy there. That's where true financial security is built. Dr. Reed, that is fantastic, actionable advice. Thank you so much for your insights today. Thanks for having me. Before we explore further, I have a huge request. If you could please subscribe to the channel, leave a like, and leave a comment. It would mean a lot to me. I deeply believe that you need to be a disaster in order to become a master, and I can only promise that every episode is going to be better and better for you. Thank you very much, and let's continue into this episode. So as you think about your own financial journey, whether it's related to housing or anything else, remember the paradox. Be disciplined in your planning, but be prepared for the unplanned. Have a goal, but be willing to adapt. Let's summarize a few key takeaways from our conventional conversation today. First, embrace unpredictability. Instead of trying to predict the future, accept that it will always be surprising. Build your financial life for resilience, not for a specific outcome. Second, save for the unknown. Don't think of money as something sitting idle. Think of it as a crucial tool for navigating the inevitable downturns and unexpected expenses that life throws your way. It's your hedge against the truly unpredictable. The third one, define your enough. Don't let your financial goals be dictated by moving goalposts. Define what true security and contentment mean for you and stick to it, especially when it comes to a major decision like buying a home. Another one, practice endurance over timing. When investing, whether in stocks or real estate, think in decades, not in years. The power of compounding and the ability to ride out storms are your greatest assets. And most importantly, build a financial life that is not just about accumulating wealth, but about achieving a sense of security and peace, no matter what surprises life throws your way. This is the true paradox of finance and perhaps the most valuable lesson of all. For those of you feeling overwhelmed by the housing market, remember this. The best time to plant a tree was 20 years ago. The second best time is today. The same can be said for building a resilient financial life. Don't wait for the perfect moment. Start building your endurance now. And for any of you, if you've lasted this long, thank you very much for watching. I so much appreciate it. If you want to find out more about who Morgan Housel is, I highly recommend for you to go onto Google and YouTube and start typing his name and listening to what the man has to say. He's a very interesting, very smart, very convincing individual. I still need to purchase his book. I'm going to do it soon and I'm going to read it. And hopefully maybe in another episode at some stage I'll be able to give you a review on that book. But I'm sure it'd be worth it. If you want to explore this person further, I highly recommend for you to go to another podcast, which is called The Diary of a CEO. Stephen Bartlett is a host over there. They obviously are huge, much bigger than me, but if I helped you in any way to gain some kind of insight, some kind of value out of this, I'm so happy about that, because that's what I'm trying to do. Just raise some kind of awareness and maybe give you a bit of insight and knowledge on this topic. Even though it was brief, I still think that maybe it was valuable enough for you to like and subscribe to the channel. And again, just if you want to explore Mr. Housel further, I recommend for you to go to a podcast and watch one of his recent conversations that he had with a Mr. Stephen Bartlett in the Diary of a CEO. I'm going to leave the link down below in my description video for anyone who wants to go and explore further. Or if you like, you can watch another one of my episodes. That's all the time we have for today. Thank you for listening to the Paradox Experience podcast once again. Be sure to subscribe and leave us a review. Until next time, stay curious and stay resilient. Thank you, and I'll see you next time.